Welcome to the first ever episode of, well, I don't know what we're going to call this thing because it was an idea that Christiana had, and then I decided to force us to do it. So we're going to try this out and we'll go from there. My secret as a founder is I hate naming things. That's why everything is AMO blank. Media operators, AMO Summit, AMO this, who knows. Anyway, here's the idea for the show. Christiana, the first ever reporter here at AMO, and I are going to discuss some of the big stories that we have reported on over the last week, some of the things that we're thinking about, and then we'll discuss that. And in the future, we'll bring guests on and ask them their thoughts on what's going on in the market, what they're doing at their business, their perspectives on things, and we'll go from there. So, if you work in the media and events industry and want to hear us nerd out on everything that is this, hit subscribe or follow or whatever it is you do on whatever app it is you use. And with that, Christiana, I turn it over to you.
Thank you, Jacob. The first story we're talking about is Vox, which is really, I think, was initially known for New York Magazine, The Verge, but it's now becoming more known for its podcast network. Just yesterday, they added a weekly women's basketball show hosted by Sue Bird, and they, generally speaking, rank pretty highly in monthly average unique listeners. So we wrote about their flagship podcast called Today Explained, which launched in about 2018 and is distributed through all the usual digital platforms. And in 2022, they started distributing it through NPR. They are now at 159 stations and have more than 1 million listeners through NPR, which, while they couldn't provide any definitive results about how that's impacted maybe bringing NPR listeners over to the podcasts and their other podcasts. They did say it was really great for brand awareness, for booking guests, and just it was great for broader reach. I know this story left you wanting, Jacob, but do you think public radio is a real option for other podcasts from Vox or anywhere else?
I think that there are a couple of places that this plays out. If we look at like the political scene right now, obviously public radio is losing some of its budget and all that from the government, and so you could make an argument that partnering with other media companies to help distribute some content would help alleviate some of their cost structure, maybe. But I think this is one of those like the very top show gets this sort of deal rather than many different media companies kind of getting this deal. It's great for Vox. It gives them a ton of distribution. As you reported in the story, it helps them get better guests, which kind of is a flywheel. Great guests means great audience. Great audience means great guests, and just kind of perpetuates. But I would have a hard time imagining most other media companies kind of getting this opportunity. So it's one of those like great for Vox, maybe great for a couple of others, but like it's definitely a tale of like the 1% from an audio perspective. But it does show the evolution of Vox, and it kind of does show where things are going for the company. Obviously, they sold Polygon this week, which is kind of an indication of where things are going as they continue to lean into these more multimedia and slightly glossier brand type products.
Right. Well, we'll see how that goes. So Dotdash Media reported earnings this week for the first quarter. They did have a bit of a revenue gain, but core sessions dropped almost 3%, which is not ideal. On the call, Neil Vogel, the CEO, talked about having tough comparisons from January and February of last year, having less than one less day in the quarter. Easter fell in the second quarter instead of the first quarter this year. And he said there were news cycle distractions like the fires in Los Angeles and, of course, the nonstop political news out of D.C. Despite that, they saw an improvement in the quarter, with March showing 8% digital advertising growth and April apparently continuing in that same vein. Specifically for advertisers, they said that advertisers are a little bit moody with everything happening in the markets and geopolitical turmoil, uncertainty, but so far no one has changed anything, and so the outlook remains the same. Jacob, what do you think about those results?
So there was going to come a point where Dotdash's at least top line traffic growth started to flatline. There's as you get bigger, it becomes harder to like generate strong growth from there. All Neil's points are true, right? One less day in the quarter means that there's going to be some decline. Um, Easter falling in Q2. I don't actually know when Easter was last year. I thought Easter was always in April. Um, the news cycle definitely factors in. If people are spending more time focusing on other issues, that's going to have an impact. But I'm not entirely sure if that's like how extreme of a thing that is. Like if we think about the type of content that Dotdash Meredith does, if we look at like recipes or food, which is about a fifth of their portfolio, people are still thinking about food even when there's political news. And so, like to some extent, I'm not entirely sure if news and like the fires in LA, unless there's a large audience in LA, which I guess there would be. It's one of the larger cities, but I have a hard time imagining that that's going to have a direct connection to their more service-oriented content. What type of retirement products do I want on Investopedia, or what should I make Wednesday night for dinner on Real or one of their recipe sites or something like that. So I think these things do factor in. I'm just not entirely sure, how much they matter. Obviously, a less day does matter. Like that of course is a thing. The thing that I'm going to be paying attention to is, what is the impact of these chat like AI products. You talk to a lot of publishers, like they're starting to see an increase in traffic from ChatGPT, which is a good thing, right? That's showing up in their Google Analytics, which is obviously a positive. The problem is we know that click-through rates from chat-like products is far lower than from Google search. And so if you're getting, and like not just a little bit, like magnitudes worse from a click-through rate perspective. So if you're getting 1,000 clicks from ChatGPT, well, then you probably were getting far, far more clicks from Google. And so I expect that um, we're going to start seeing traffic pressure, if you will, even from those core sessions, especially as so much of Dotdash's traffic comes from Google. A lot of publishers come from Google, but like because of the type of content and the service-oriented content that Dotdash Meredith has, I absolutely expect to see drops in traffic there. I think the thing that's interesting about Dotdash Meredith is, despite that, their digital revenue was up, right? And I think part of the reason that's the case is because they have that Decipher product, which is a contextual, non-cookied, um, non like individual user based product. So they don't have to know anything about who the user is to know what the user is wants because of that contextual nature. If you are looking at recipes and like what wines go with certain foods, maybe you're having a party, so let me show you cleaning product to get wine out of the carpet, right? And they've done enough analysis because they do have so much scale that they're now able to kind of infer what someone might be interested in based off of what they're consuming, even if it's not like directly related. That will allow
Yes.
them to increase their revenue per impression, which is a positive for them. But at some point, like that, there is going to be pressure. Like I don't think that we should expect, you know, monumental growth from a traffic perspective going forward. I'm not bullish on that.
Well, that's the whole thing. I mean, DDM is a giant. They're doing really well. They have millions and millions of users, but they're also doing fairly general consumer service related journalism that you can kind of find anywhere, even if, some of the brands have some really good staying power. It's the one place in publishing that's just really uncertain. I mean, does DDM become in the long run a tech company?
That is a place to play right now. They would say that their service journalism is better than everybody else's. And I'm not going to pass judgment on whether they do or don't produce the best. I do think this idea of them becoming more of a tech company is possible. They're one of the few media companies that has enough scale where investing in really good ad technology makes sense, and not just like using third party um, partners, but like building their own tech internally. Like their head of innovation has like a PhD in like, I don't know, theoretical physics. Like these are not like unintelligent people. And so I think that there is an argument to be made, especially with some of the recent hires they've made, that they are going to try to start building more ad network or ad tech type products that start to put decipher like ads across the internet. And if that happens, this doesn't even matter from a traffic perspective. I mean, it does, right? Because there's still $1 billion a year revenue digital business, which like there are very few of those. But this doesn't really like they can start to really lean into the value of everybody else's impressions on the internet and continue to generate much stronger growth. And because there are no you know costs associated with creating more content to get more of that traffic, right? They're just simply putting their ads on other people's websites. Their margins will actually increase. So, like I said, Dotdash Meredith is one of those examples of, we talk about other publishers, Future or Zip Davis or a lot of these others that might be really, really dependent on search, like DDM. But unlike, DDM, those guys don't have any like alternative, right? Dotdash Meredith still has this core ad technology and like really strong brands that I think that they might see traffic drop in the short term, but as they ramp up these ad network partnerships, they'll actually wind up delivering more ad impressions a year from now, perhaps than less.
You saw they hired Jim Lawson as president of Decipher, that product that you're talking about. He was the co-founder of AdTheorent, a machine learning powered DSP, which is a media buying platform that is not reliant on individual identifiers, which sounds a lot like what they're doing. I don't know much about him. Do you have any thoughts there?
Yeah, I've never met him, but the fact that they've hired a president of this division means that he is going to have his own P&L. And when he has his own P&L, the thing that they're going to be looking for is he generating revenue growth as a division? And I suspect the vast majority of that revenue growth is going to come outside of DDM's portfolio. They're going to spend a lot more time going to other premium publishers and saying, hey, we can give you a lot more revenue because our ads are just better, which, by the way, is their whole argument for the OpenAI deal. They make, I don't know what the number is. We reported on it and I'm blanking on it, but they make 8 figures in licensing revenue from OpenAI. But what they would say is the money's nice, but the ability to use OpenAI's technology within Decipher makes Decipher that much stronger. That's the real innovation. And so bringing on a president to run that division is 100% a move into ramping that up as its own standalone product. And ironically, now that IAC's founder Barry Diller is back kind of running the show day to day, he's an M&A guy. Like, he loves to acquire things. Dotdash is their biggest company. I wouldn't be surprised if they start to acquire more things for Dotdash Meredith, but those things likely won't be other publications. They will likely be incremental ad tech to make Decipher stronger.
Got it. Got it. Okay. And the last story we're going to talk about is Arizent, not Arizent, Arizent, which we were pretty excited about. They publish, they have 7 verticals: banking, accounting, digital insurance, and they've got hit by search and social. Traffic has dropped about 18% over the past year, which actually isn't even that bad. But they continue to be profitable. They have annual recurring revenue of $25 million. Nonetheless, their owner, Observer Capital, challenged management to double the size of paid subscriptions because they realized that of all of the strategies that they were employing, the most profitable and most consistent business was paid subscriptions, and specifically enterprise paid subscriptions. So they have a 3-part plan to do this. One is to niche down as niche as you can get. And instead of focusing on just an industry, they're focusing on specific roles within those industries. So within banking, they're specifically focusing on payments to start. So they're looking at the roles. And then the second part is that building up the enterprise sales channel. Because while it's nice to get a single credit card subscriber, there's nothing like selling, a $10,000, $20,000, $30,000 year-long subscription to a company. And what's interesting there is they're making it an unlimited. So the whole company has access to it. And then the third part is speeding up the revenue flywheel across the business. So subscriptions, live events, marketing services, to ramp up for lead generation. So it sounds great. What could go wrong?
I mean, what could go wrong is they just can't sell it, right? Like that's fundamentally the question here is, will they be able to find good enough sellers who know how to sell this sort of a product? I'm actually not very like bearish on their ability to do that. I think that they will find the salespeople, they will train those salespeople. I know that they've had some early successes. I think the bigger thing is what can go right. Um, what I like about this model is, when we sell subscriptions, like AMO individual subscription 395, we do sell some group subscriptions. But I think that a lot of subscription based media companies, there's a little bit of an obsession about the price per seat. And the issue with that is the price per seat doesn't pay your bills. The total revenue you make from the company is what pays your bills. It's the same thing with an ad business. People get a little obsessed with the CPM, but CPMs don't pay the bills, right? The actual total ad spend pays the bills. And so what's interesting here is Horizon is going to absolutely generate less revenue per user on a subscription basis, right? Because if they sign up 10,000 bankers from one company, that's not going to be a $10 million deal when an individual subscription might be $1,000, but maybe they're making, I don't know, $25 per subscriber. Maybe I don't know what those numbers are, but the value there is because they're getting everybody, the contract size might be bigger, even if the price per seat is lower, right? And at the end of the day, they care about the revenue more than they care about the price per seat. Where this really doubles down and really becomes powerful is with that revenue flywheel. So when you talk about this with other media companies that are predominantly subscription only, their concern is, well, if I give the seats away for too cheap, like we have limitation in revenue growth. What Horizon is looking at is, well, if we can get 10,000 bankers from one of these banks to read our publication, like the one that I really know is American Banker, or maybe the subscription revenue alone isn't the biggest possible piece of the pie, but now they have 10,000 people in their database. So now they can email those people. Now they can promote other marketing services products to them, lead gen, ads, all of that. They can try to sell tickets to them for their events. And this is where being a diversified media business really starts to be valuable for them, where the LTV of a reader based purely on subscriptions when selling one of these enterprise deals might not be the highest, but when you factor in that some of them are also going to buy tickets, some of them are also going to download white papers or attend webinars or whatever lead gen offerings they have. Once you start to add in all those other components, having all those bankers in there, even at a lower price per seat, is actually really valuable. The issue for other media companies is they just don't have those types of products, right? Even AMO doesn't have a robust enough marketing services business to be able to back that up. Yes, we could take a lower price per seat and get people in, and we do offer webinars and we do have an event, but it's not quite as robust as a much more mature business like Horizon, which has a number of different products available to it. And so I think where this flywheel really ramps up, and this is really a smart play, is when you can monetize multiple ways. When you are not so myopically focused on just the price per seat, but the total revenue you can generate per user at the maximum number of users, right? It's better to make hundreds of dollars across thousands of people than thousands of dollars across tens of people. And I think that's the thing that Horizon figured out. And that's what really gets me excited about this model is they're growing their audience aggressively, right? You get 10,000 bankers. That's good. So now their database is much richer. They've got a ton of first party data about them because they have to actually sign up and create an account to get access to the content. And then they can sell marketing services, which was going to be under pressure due to the traffic drops, and they can sell tickets, they can sell other things. and overall grow the revenue pie. Now, can they double the business? And I think what it was, 2 years is what they wanted.
Three
I don't
years, 3
know.
years.
3 years, right? Can they double the business? Who knows? But also, it's privately owned. Their parent company has owned them for quite some time. And, I think that if they are getting the momentum that they want, if it takes 4 years, I don't think anyone's upset.
Is there a difference between having a lot of people reading you versus having just the C-suite reading you? I'm thinking about this idea of scale versus, it's nice that, for AMO, we can say we're read by some very important people in the industry, which is something that makes us special. Do we need to be read by more people? How do you balance that?
So I think the more people factors in when you are leaning more into sponsorships, right? Because if we were just the event and a subscription business, we would have a very profitable business on 1,000 CEOs reading us, and and 25% of those people coming to the event, right? We would probably charge more than we charge for our subscription right now. We would have to introduce different types of products to make sure they're super engaged. But you can build something pretty valuable there. I think once you introduce a marketing services component to it, where you're trying to do lead gen and all that, having more people does matter to an extent, right? So I can imagine AMO getting to the point where we care about the C-suite, the CEO, the CEO's direct reports, those direct reports down to the director level. Who is going to help make a decision about what email service provider we should use? Well, the director of newsletters might at a larger company. Even you could make an argument your managers of marketing and all that, depending on if they're the daily users of the tools. Having those people, there is value, especially when you can build segments where you're only promoting specific things to specific people. The issue is the lower you go down there from a subscription perspective, it gets harder to justify, right? When I think about the group subs that we've sold, it's typically 5 or 10 people. And if I look at who those people are, they still tend to be pretty senior. This is where the enterprise subscription becomes interesting, is that they're not thinking as much about the number of people who are getting the subscription, right? And so if director and above is 1,000 people, and then they could add another 1,000 people at underneath director, I don't think Verizon's going to care in a negative way about that incremental 1,000 people, because they will make up the money on them other ways. So I think that's really the thing here is we will absolutely want to go down the org chart at AMO, but to do that will just require more editorial coverage that is more specific to them, and better sales and segmenting so that we're promoting the right product to the right people. It's just a question of how you're monetizing.
Well, we'll definitely have more content starting next week with our new
We will,
reporter.
yeah. We have another reporter starting, Bron Mayer, who is a reporter over in London, starts on Monday. So now we are going from me and you to me, you, and one other reporter. We're growing so quickly here at AMO.
Very exciting. Awesome. Well, thank you, Jacob. It's been a pleasure as usual.
As always, it's wonderful to chat with you. And to everyone who watched, let us know your thoughts in the comments below. Email us, jacob@amediaoperator.com and christiana@amediaoperator.com. And let us know your thoughts. Sign up for a Media Operator, and we will see you soon.